there is something very strange going on at the New York Federal Reserve in general. So the website, you can see it there on your screen, the URL, the website that tracks the New York Fed daily repo amount has stopped updating for over 24 hours now due to maintenance. And normally, if you're familiar with checking the Federal Reserve's websites, normally they pre-announce maintenance dates. So for a while now, over a month, the Fed's official balance sheet, and I've been checking this, and there's a reason I haven't done many stories on this, is because the Fed's official balance sheet really hasn't done anything in a month. So since January 1st, 2020, the Fed's official balance sheet is net down about $7 billion. So it's been up, down, up, down, up, down. This is despite $60 billion per month in not QE, which is supposed to increase the balance sheet. Not sure exactly when they add that $60 billion per month in treasury purchases, so it should occur soon. The balance sheet should be up $60 billion per month because the Fed hasn't said that they're canceling the $60 billion per month in not QE. And then also this week, we had record amounts back to almost the initial levels from the first couple weeks of September when Repo Madness started. We had near record amounts or close to record amounts of term repos. And according to Danielle DiMartino Booth, who was at the Dallas Federal Reserve for many years, and another former Federal Reserve Bank employee at the Dallas Fed who did an interview with her, George Goncalves. The interview is now free on the Real Vision Television YouTube channel, Real Vision Finance YouTube channel. And they were talking about how these term repos are supposed to hit the Fed's official balance sheet. But really what I've seen now for weeks is that I notice whenever I see these headlines out about the term repos, or my friends that are tracking these term repos on a daily basis, especially financial professionals, are sending me these notes that there's just divorce from the Fed's official balance sheet and the term repos. It seems that the Fed's official balance sheet is no longer adding the term repos. And I think I might know why. This is an educated guess, because a number of Federal Reserve Bank presidents and Federal Reserve Board of Governor members have come out in the last month, including the current president at the Dallas Federal Reserve Bank, Robert Kaplan, who is a never-Trumper. He's very globalist. I think he was a professor at Harvard, and I think he worked at Goldman Sachs. He was a director at Goldman Sachs, or a very high position up there for a while. And he said in an interview for Bloomberg, I think January 15th or 16th, he said, quote, "I believe very strongly we're going to need to find a way to curtail the growth in the balance sheet," said Dallas Fed President Robert Kaplan at a moderated discussion earlier this month. This was from earlier in January 2020. He has called the program of the Fed's not QE a derivative of QE and worried the recent intervention was fueling excesses and imbalances that may be hard to deal with later. And then you have other people at the Fed like Neil Kashkari saying that it's just an asset swap, even though the balance sheet, the Fed's official balance sheet, is up a lot on not QE and Repo Madness. And you have people inside the Fed, outside the Fed, arguing about the Fed's balance sheet's impact on stocks. Well, let's just take a look quickly at the Dow Jones Industrial Average. So the Fed rate hikes ended before August 2019. They stopped the rate hikes, and then they quickly started the rate cuts because the yield curve was inverting and they panicked. But the quantitative tightening, which is really just balance sheet reduction, that stopped in August 2019. I don't remember the exact date, but it stopped in August 2019 ahead of schedule. I don't think it was supposed to stop until September 2019 or October 2019, where the Fed's official balance sheet was supposed to stop decreasing. And so that reversed, and the Dow back then was under 26,000 towards the end of August, at 25,628 on August 23rd, 2019. And as the Repo Madness started and the Fed started cutting interest rates, and then not QE started in October, the Fed's balance sheet, with all those factors involved with the rate cuts and the not QE program and all the extra emergency liquidity which was the Dow Jones Industrial Average, excuse me, which was in somewhat of a downtrend in a correction, started to massively reverse by mid-October. It was over 27,000 again, and through October to present, until the China coronavirus outbreak, the stock market was in a very clear uptrend. It was looking like the Dow was going to get close to 30,000, but now that obviously we have some market participants are starting to understand what's really going on with China's coronavirus, that some market participants are starting to get worried about that. We know that more with oil and natural gas prices, copper, iron ore, base metals first, but eventually I think other markets will start to realize how bad things truly are in China. So my thesis now could be the Fed has just decided, we'll have to see if this New York Fed website comes back with the repo numbers, but clearly, in my opinion, for at least the last couple weeks on the Fed's official balance sheet, those term repos, which are supposed to be added to the Fed's official balance sheet, they're supposed to increase the Fed's official balance sheet, are not increasing the Fed's official balance sheet. How do we profit from this? Well, the dollar's not collapsing. People who are thinking that China's playing the long game and China's going to collapse the dollar are going to have to wait a little bit longer, probably at least another couple weeks or another couple months before China really puts the screws in. By the way, I'm being sarcastic on this. The dollar index is way above 98. The dollar index is almost at 99 today, 98.7. So the dollar index is surprisingly, in spite of all this past week, a record amount of term repo that's not hitting the Fed's official balance sheet. The dollar index is still way above 98. It's rallied. Probably because money is leaving emerging markets, money is leaving base metals, money is probably leaving oil. Oil had a little rally, but I think the oil bear market's clear, and money's leaving China. And money, for at least the short term, is going into dollars and going into 10-year U.S. Treasuries. The yield in 10-year U.S. Treasuries has gone down substantially since the beginning of January 2020. Sonny says we're in quad 4. Oh yeah, that's Hedgeye. But we were in quad 3 only a couple weeks ago, which was stagflation. I don't know. This is the problem with paying attention to a lot of hedge fund managers, because they can literally change their mind like the next day. I have new information about Wuhan, but I won't say it on the show because then this video will be 100% demonetized. I have to debate if I want to release it on the free podcast or if I put it behind the paywall on my Patreon account. I spoke to my source in Wuhan who's trapped inside the city, and the Chinese government's food policy has changed again. It's ridiculous, and there's now even confirmation. I didn't even know that this was possible. There's now apparently drones that can take people's temperatures from very far away. That is crazy. So I'll save that either for another podcast show or for Patreon account contributors. I'm debating, but there's 100% chance that if I do put that video out for free, it would be demonetized. So I wouldn't earn a cent doing it, and it could hurt financially all my other videos if I put that out. There's this Wall Street Journal article from the end of January 28th by Nick Timmy. I'm going to screw this up. I think it's Greek. Timiraos. With rates on hold, Fed faces decisions on its balance sheet. So if you have a Wall Street Journal subscription, take a look at that. But there are a lot of people at the Fed that have publicly voiced their comments in the last couple weeks that are starting to worry that the balance sheet has grown too much too quickly since quantitative tightening ended with the rate cuts and repo madness and the not QE program. There's been rumors going around for a couple weeks now that the Fed might reduce the amount of not QE from $60 billion per month down to $10 billion per month. But then the issue is, who the hell is going to buy all the treasuries? Because foreigners are not buying the treasuries. Foreigners need dollars to deal with the dollar-denominated debt. If you're wondering, if you're in the gold community and you believe all these gold experts that have been telling people the dollar is about to collapse for 10 years every couple weeks or every couple months, definitely go and listen to my dollar tug of war video. I put it out right around January 1st, 2020. I spent 6 minutes analyzing the two powerful forces pulling on the dollar that people in the gold community either don't know, don't understand, or they're lying about. And that's why the dollar is not collapsing. Okay, long term, the US government, the Federal Reserve, the US Treasury all want a weaker dollar. And the dollar is going to have a lot of problems, along with every other currency. But in the short term, the dollar rally may continue, or at least it's not going to collapse. This is an interesting question. Is the coronavirus in China good for the US economy? Not really. Not really. It stops international trade. It is any supply chains that were still in mainland China are in dramatic trouble. So actually, this is going to long-term hurt the Chinese economy even more, because now supply chains, if they didn't already have good reasons to move their supply chains out of China, more will now be moving out of China. But if I talk too much about the coronavirus on this video, it'll be demonetized. So I'm going to be careful. I don't want all my videos demonetized, because then that means my channel won't grow, and then that means I don't have a couple different sources of income coming in to pay my bills. And there's crazy stuff I'll leave for another show about food deliveries in China. The food policy's nuts there. There's rationing with pork. I'll talk about that on another show. Michael asks, China is supposed to be open for business completely again on February 10th. Do I think it will happen? Absolutely not. There's stuff going around Twitter with the videos in Wuhan of those trucks spraying, those large trucks spraying like weird stuff. I don't know if it's bleach or whatever. It's some type of disinfecting agent or chemicals all over the place. And then also in Guangzhou, some of the factories there's a lot of factories in Guangzhou, they were told that they should not, politely asked not to reopen until beginning of March. I already did a show on FedCoin. Definitely, I released that video yesterday. It's about 8 or 9 minutes long. Definitely go and take a look at that. I cited a lot of sources in there. Go and watch that video on FedCoin. Tigar says we are going to run out of parts here. Yep. Yeah, it's not going to benefit. What's happening in China is not going to benefit a lot of global trade. It's not going to benefit a lot of US companies, especially ones that have global supply chains and that have to move their supply chain out of China. It's not going to benefit them. It's not going to benefit these global companies, these American or global companies, multinationals that do a lot of business in China, that have a lot of sales. The rumors are a lot of Chinese factory owners are being asked to prepare for at least another month. China is censoring a lot. When will silver spike? Gold's been performing a lot better than silver. We need some of these copper miners to go bankrupt. There's a lot of paper price manipulation on silver. Hopefully one day that will end, or at least be reduced. I would like to see, this is just my opinion, I would like to see silver by the end of 2020, I would like to see silver at like $22, $23, because a lot of silver miners have cut their costs, and a lot of silver miners, with the lower oil prices, they can have really robust margins and make a good money at $22, $23 an ounce silver. Not every primary silver miner, but a lot of them can make very good money at $22, $23 an ounce silver by the end of 2020 if oil prices stay low because of what's happening in China. I think the coronavirus could be the black swan, but central banks are flooding the stock markets and airline stocks and others with lots of capital to prevent crashes. But the real economy in China is having a lot of problems. Things have ground to a halt. There's tons of videos all over the place and news stories out about Shenzhen and Guangzhou and how those are shut down, and how authorities are going door to door to look for infected victims. They're tracking down anyone from Wuhan who went to another city. The authorities are tracking anyone down who got out of Wuhan into another city in mainland China, and they're forcing them into quarantine. I have to be careful about how much I talk about the coronavirus outbreak on this live stream show, or even though this is not about it, this is about the Fed's balance sheet and repo madness. Like, the whole thing's just going to get demonetized. And when I protest now, first of all, I've been doing China videos for way over a year, many different types of China videos, and I've never had a single one demonetized until the last week. And in the last week, I had 3 China videos demonetized, where I put manual protests in, and the protests were denied within 28 or 48 hours. So you may see ads on some of those coronavirus videos on others, but I'm not getting any of the ad revenue. The ad revenue is going to Google and YouTube then. I'm not getting it. Or maybe it's going directly to the Chinese government. I don't know. Okay, well, that's the short little update for this. So as of right now, surprisingly, the New York Federal Reserve website that updates the daily repo is down, and that was after earlier this week there was record announcements of term repo that we have not seen in a while. And these large investment banks, the money center banks and investment banks and primary dealers, as I've said now for months, they prefer term repo to overnight repo because then they have control over the capital they've borrowed for longer periods of time. And if this repo scheme, and the Fed's not going to add officially to their balance sheet, what's most likely happening is very similar to how China rolls over bad loans in China, where Kyle Bass says a perpetually rolled over loan gathers no loss. Well, it's a very similar concept with repo and term repo here in the US. A perpetually rolled over term repo gathers no loss, and apparently also now will not count to the Fed's official balance sheet. At least for the last month or so, it has not. So welcome to dystopia, just more bullshit from the people in power. I've talked about this. What is rule number 1? Rule number 1 is the rules are going to change. And if the Fed has now decided that they don't want people focusing on how quickly their balance sheet has grown since August of 2019, the end of August 2019, and it's up a lot since the end of August 2019, then they're going to confuse, obfuscate, lie, hide, whatever, to change the rules and make it so most people can't tell. And that's what's also going to keep the dollar stronger. So not only is there more demand for dollars globally because of dollar-denominated debt and dollar liabilities in these derivatives markets, but also if the market is not aware that the Fed's balance sheet is much larger, then the market's not going to price that into the dollar. Okay, well, that's it for tonight's little update, and we'll see if I do another show later or another short video on the information that I got out of Wuhan in the last 12 hours from my top source, or one of my top sources in mainland China. The guy has a very good track record. He was talking about the African swine flu months before it hit the mainstream media, about the price increases in pork, and apparently the price increases in pork are accelerating even faster in Wuhan because there's rationing and it sounds like price controls. So there was almost a doubling of pork prices in Wuhan very, very recently, just last week or two. And other crazy, nefarious things that I'll talk about maybe on another show. Okay, everyone, bye for now.